Good morning, everybody. Hey, welcome to Thursday, December 10th. Hard to believe, isn't it? Hey, yep, I'm back in the office after 3 days of continuing education, and we'll be here today and tomorrow. And next week, well, it'll be a hit and miss deal. I got continuing education too. Some of it I'll do here, some of it I'll do at the house. So, but glad to be back in the office to get some stuff done today and tomorrow. So, yesterday was a rather down day, and we'll have to see if we can bounce off of those give backs today. So that'll be Dave and I's conversation, along with obviously unemployment numbers. So that's coming up next.
Let's head down to Statler Financial Services. I didn't ask where he was this morning. Phillip Statler is on the line, though. Phillip, good morning. How are you?
Hey, good morning, Dave. Back in the office today. So finished up my 3 days of tax continuing education, and so glad to be back downtown at the office today.
All right. Yeah, the air conditioning's comfortable there, and you don't have to put up with family fixing breakfast in the background, right?
Yeah, I don't get any of that in my house. I don't know about you, but I don't get any of that in my house. So
you have to make your own breakfast?
yeah. I make the coffee too, so you know.
Oh, geez, you are a dream husband, I guess. We're setting the table for the morning. It was an off day on Wall Street yesterday. 105 down on the Dow, 244 down on the Nasdaq, and we'll get to what might have pushed that down in a second or two. Standard & Poor's was off by 29.5. I'm kind of looking at everything except Nasdaq kind of being profit-taking impulse after a run-up, aren't you?
Yeah, I think so. I mean, you think on Tuesday we kind of hit some all-time highs, so I think we got some profit taking and some other issues there. One of the headlines I saw was increased fear over Brexit and COVID. So those things continue to weigh on the marketplace because we don't have any relief or stimulus coming out of Congress yet. They keep promising. But they seem to keep hitting these little hiccups where they can't come to an agreement. So I think that's weighing finally on the markets a little bit.
Offhand, I think you're right. Yeah, we've been alluding to Brexit. The Germans and the French and the British don't like each other all that much to begin with, and they're actually trying to negotiate an amicable divorce, which probably isn't going to happen. And we all hear the COVID news regularly. The shutdowns are scaring people, and we don't know how fast we're going to be able to get that Pfizer vaccine distributed. With a little bit of luck, we'll get permission to start distributing it later on today. All that could be good. I kind of put off talking about the NASDAQ. It was down by over 1%. Big chunk of that was doggone. Now we're suing Facebook on antitrust grounds. That's kind of an interesting headline, isn't it?
It is. And so that seems to be the big deal. We have 48 state attorneys have filed suit against Facebook on antitrust or anti-competitive behavior. In their purchase of Instagram and WhatsApp have both brought a lot of a lot of grief to the marketplace, thinking that they're buying up their competition, and then they don't have any competition, and so we don't like monopolies, and so that seems to be the theme of this lawsuit, is that Facebook's gotten too big and they've got too much cash, so they just buy their competition and either shelve them or repurpose them for their own use.
Absolutely. Yeah. Until the Instagram and WhatsApp thing hit, my instinct was antitrust on a business like Facebook's, where there basically is no barrier to entry. Come up with a good idea, folks discover you, let it be known, and you grow. I mean, it's not like there's a major barrier to entry, but Facebook's developed kind of a bad habit of, as soon as somebody gets the least bit threatening to them, they buy them up, which is a dream come true for the guys that developed Instagram and now WhatsApp. But it does kind of put a pall on anything resembling a competitive atmosphere in a business otherwise that I wouldn't have a lot of sympathy for an antitrust suit in.
Well, yeah, and that's the key. There's no competition, and so that's the basis of this court case. And so we'll have to see how that works out. I mean, yesterday, Facebook was down almost 2%. Today, they're down about 0.7% so far. So they're way off of their 52-week high.
Understood. Yeah, the Facebook thing actually makes more sense to me than the Google antitrust suit that's kind of following a parallel course. Google, at the very least, a search engine. Hey, you got the smarts, you got the cojones, you can do it, and if the market likes you, well, you can be competitive. But in Facebook's case, they keep buying up the other people that caused them any grief, and all of a sudden now you do have some anti-competitive practices going on.
Yeah, I think that's the point, and we'll have to see how that plays out through the litigation.
Absolutely. It is Thursday morning. That means we get some usual data dump information out of the federal government. And the employment front, it was disappointing. The first-time jobless claims, they were expecting by my analysts 725,000 jobless claims. We beat that by a pretty wide margin. I came in at 853,000. Again, it's a big improvement over what we were experiencing in the spring, and probably not a surprise given the shutdowns on the left coast, but the market didn't like that number one bit.
No, they didn't. We started, once that number came out, we did see the futures start to slide even more than what it had. So, but let's face it, we've got more and more companies that are, more and more states that are demanding that companies close down. And so, you kind of expect that we're going to see more and more first-time claims as we progress.
Kind of like I was saying, no big surprise to us, but evidently it was to the market. The continuing claims number also went up, which was something that I found kind of disconcerting. It was 5.34 million expected. We got 5.76 million continuing jobless claims, and that I've always kind of said is probably the number that would make more sense watching day in, day out, simply on the grounds that shutdowns come and go.
Well, that's true, and that's one of the things that was astronomically high at one point, and after 2008, and we've seen it drop significantly until we hit obviously this stage with COVID, and so we've seen that kind of bounce back. The unemployment number still is getting closer to what we like to see, but it is what it is, and I think that we'll continue to see it go the wrong direction for a little while right now.
Absolutely. Just with these 1 week data points kind of re-emphasize that while we're going in the right direction overall, the job ain't done yet. That's for sure.
That's right. We still have a long way to go. And this vaccine, as they get more and more of those online and distributed, hopefully we'll start to see some limitations on all the state closures.
Yeah, absolutely. The other element that came out of the government data dump this morning was consumer inflation, and it's one of those numbers that you and I always scratch our head. Is this good news or bad news? 1/10 of a point increase was what we were expecting in consumer prices. We ended up getting 2/10 of a point increase, which if we were worried about inflation, we wouldn't like that. But my hunch is that still indicates healthy consumer demand pushing prices up. So for the short term anyway, 2.4% annualized rate ain't bad. I'm not overly worried about that. Are you?
No, not really, especially when you talk about the Fed and what the Fed wants. They changed their definition basically of what they want to see. They want to see an average 2% inflation. And so this will help us get us closer to that number.
Absolutely. And as I said, under normal circumstances, you don't want to see inflation, the measurement double on a month-by-month basis of what people expected. But given a time that we're looking at the consumer economy, especially this time of the year, I'm kind of thinking right now for the short term, the data point is not bad news. Looking at companies, we got one company that I understand reported quarterly earnings, didn't they?
They do. We have, and we're getting really towards the end here of earnings season. So we had Restoration Hardware reported, and they beat by almost $1 a share. Came in at $6.20 a share. They beat on revenue also. They saw some strong demand as people are staying home, working on their houses and doing projects from that standpoint. They did have a little bit of a disruption from some order flow. Again, supply chain issues have been an issue across the board. They are trading down just a tad this morning, about a 0.2%.
And that doesn't sound like a monster exciting thing, given the fact the markets seem to be developing kind of a pink tinge this morning. Other news items that caught your eye that might affect us today, what do you think?
Well, the other thing I have is Moderna. We talked a lot yesterday, or we didn't talk about, but a lot in the news was how the vaccine that's out there right now, Pfizer, hadn't done a lot with adolescents or children in terms of
Hmm.
testing. And so Moderna is they've picked up the pace there, and they're doing a pretty big size study, about 3,000 adolescents, age 12 to 18, to see kind of what that may look like for them. They're just getting hit just because everything's going down. I think this morning they're down about 1.8% this morning. So the other big thing that happened yesterday was DoorDash. DoorDash
Oh,
came out in this IPO yesterday.
how did it?
Came out
Anyway,
well. It went up pretty significantly. It had only an 85% jump the first day.
phew,
They
I
came out at a dollar, not a dollar, $102 a share, and they closed yesterday at $189 a share.
The longer I watch news, the less I know for sure. So I've kind of learned I never say never, but that still strikes me as the most ill-timed IPO on the face of the earth, and I'm amazed that it actually skyrocketed up like that in its first day.
It did. I mean, it closed at 189. It actually hit 195 intraday. So this morning, obviously, there's some more people that bought it low, and they're getting rid of it now. So it's down about 5.7% this morning.
Which underscores the fact buying IPOs is the money that goes into the gambling fund, not necessarily in the investment fund, right?
Yeah, that's definitely a gamble, because you can lose just as good as you can win.
Absolutely. We've seen a couple of those happen in the last few years. As we mentioned, it was an off day on Wall Street yesterday. NASDAQ got pushed down measurably by all the tidbits of news about antitrust lawsuits against Facebook and Google. The rest of it looks like routine profit taking. 45 minutes before we open this morning, what are we looking at today, Phillip?
Hey, on the stock index, we got a lot of red ink this morning, Dave. We got the S&P 500 up about 1/3%. We've got the Dow 30 up 1/4%, and we've got NASDAQ up about 0.6%. So they're all in the red. They're all down, all negative. They're all just getting beat up. So another day of profit taking could be in line for today. If we look at the other side of the coin, the commodity side, we've got gold and silver both up. Silver got a pretty good jump today, 1.2%, and gold's up 0.5%. And crude oil, Dave, you're going to like this number. It's up almost 1.5% to $46.19 a barrel.
Couple, $3 a barrel, we can start complaining about it being too high, right?
That's right. You and I, we're never happy. We want it somewhere it's never at.
Yeah, well, that's it. That's just kind of the story of life. Looks like it might be a little bit of hedging bets going on because the bond rates are suddenly going back up a little bit this morning as well. Kind of interesting change given what's happening on equities. Overseas markets, it was negative in Asia this morning. Not all that big a change, but we're talking about like 0.25% drops on the Asian rim markets. Mixed bag in Europe this morning, given their Brexit interesting stuff going on. I'm kind of confused by Great Britain being up by 0.5%. That might be a little bit of euphoria over their vaccine injections. Germany off by a little bit. Phillip, we go to all these numbers every week, and they go up, they go down, and sometimes you and I can't figure out why they are. That's called instability, and it's kind of scary when you're close to retirement age. How do I find you to get that instability out of my funds?
Absolutely. Volatility in the market as you're heading into retirement is not a good thing. And so risk is the one thing you can control in your portfolio. So I developed the financial x-ray to really dive in and determine how much risk you have. Just schedule your financial x-ray. Just give me a call, 863-382-0037. You can go to my website, statlerfinancial.com. A lot of good information there. And then join us this weekend. I know we're getting axed at noon, but we'll still be on at 6 a.m. for you early risers and 10 a.m. Sunday morning. And you can always catch the repeat on my website. We've got them posted there. So on Monday morning, you can catch it there.
All righty. And hey, it's the Seminoles they're playing this Saturday. You don't mind taking a day off for that, do you?
No, that's good. That's good. I can tune that in and watch that.
I figured you'd endure that pain. Phillip, thank you so much. We'll see you tomorrow morning, all right?
All right. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, as we kind of get towards the end of this week, if I can help you with anything, determine how much risk in your portfolio, see if you need to reallocate any of those type of things, please, don't hesitate. Give me a call. That number is 863-382-0037, 863-382-0037. Hey, until tomorrow, have a great day.